All right, this is how this very strategy works. Please listen attentively and pay close attention to details on how to use this strategy to trade profitably and to make good profits. First, basically, you know already that this is in the main chart. This is the blue line on the main chart is the Ashimoku line, Ashimoku indicator, Ichimoku, and then the on this indicator window 2, the line there is also an Ishimoku indicator. Then the blue, or should I say light blue or turquoise blue lines that are pointing, this one side pointing down, this side pointing up, the same thing in indicator window 2 and in indicator window 1. These are the MACDs, which you already know. So when you see Ishimoku lined up, flat flatlined in around level 10, between level 10 and level 20. When you see Ishimoku flatlined in that area, just I like taking my screen to the end so that I can always see a complete reaction of the charts of the indicators and the candlesticks. So if you checked here, you will see that this Ashimoku had gone down to level 20 and 10, and then when it's like that, you next thing you look out for is a breakout a breakout in the main chart. When you see a breakout like this, when you see a breakout, this candle, this is a breakout, a strong breakout. After this breakout, this way you're supposed to enter. um you're supposed to take a position in the next opening candle. And when you enter in this place, note the criteria you should be looking out for before entering in this case, in this setup like this now, is first, the Ishimoku should have given you would have given you a curve movement. If it is a bullish setup, it will give you a bullish as a curve movement upward. If it is a bearish setup, it will give you a curve movement, a curve direction downward. If it is bullish setup, it will give you a curve movement upward. The same thing that what occurs here will also occur down here as well. You understand? So when you see that curve, and then another criteria is the stochastic also should be pointing in that same direction that the Ishimoku is pointing at. Then when you see this breakout, then the next candle is your entry point. And when you enter in this next candle now, your stop loss should be placed below the previous candlestick. This is the breakout. This is your entry point. Then here your stop loss should be at this support level, at this place. You understand? So now, if you hold the market, after when your market is in profit, when your position is in profit, at least two candlesticks, you take your stop loss that was at this point, bring it above or close, bring it to break even. Place your stop loss, bring it from below to break even at the place you enter a trade. That's where you're going to put your stop loss. You understand? So that it will secure the trade for you while you hold the trade and watch it move. And then after this breakout, this first breakout, another thing you should now look out for is MACD transition. MACD transition. MACD transition in the sense that this MACD lines is changing from pointing down to pointing upward, pointing downward to pointing upward, which is from bearish trend to bullish trend. You understand? And then the MACD, below MACD is I set it at 30 30 level 10 as at 30, and then the up one is at 60 60 60. The slow EMA is at 60. It's at 60, while the indicator window 2 is at 30. Indicator window 2 is at 30. The slow EMA is at 30. The other one is at 60. Why I set it so is for confirmations, because if you see here that this one transited first early before this upper indicator window one now confirmed what this has already told us earlier on. So when you see a transition like this, it tells you that this market is still going to go upward after when your market is already in profit. That's where you should hold the trade. When it goes upward like this, that's the first criteria to enter your to take a position. Shimoku at 20, between 20, below 20 and by 10 level, and then watch out for breakout at the main chart. Any breakout in the main chart, anyone that breaks your Shimoku in the main chart above, if it's for bullish, after that candle, the next candle is your entry, and then hold. That's one criteria to enter your trade. Then second criteria to enter the trade is once you see a breakout like this, and then you see a transition like this. First, this the indicator window 2 will transit first. In the indicator window 1 would confirm what this one now is saying. If this transition occurs from pointing down to pointing up, and then in the indicator window 1 does not confirm it, that means it is invalid. It's not valid yet until the indicator window 2 indicator window 1 confirms the transition that indicator window 2 is saying. That's when it is valid and strong. Then secondly is when your stochastic comes down and then curves up like this. When your stochastic comes down like this and then form a crossover, while when the candle did not break the Ishimoku, and as in break it below, it's a sign of, it's also a buy setup. Like the first candle opens, the second candle opens and gives a crossover. When you see a crossover like this, and when you see that crossover, make sure that your Ishimoku in the indicator window 2 has not gotten to level 90. It's not close to level 90. If that's gotten to level 90, you avoid the trade. You start avoiding level 80. Sorry, if you're going to level 80 for a bullish setup, you start avoiding a trade, that's when you start looking for a possible sell, because the market has headed towards over bought. You understand? So you look for a possible sell. So and like here now, that cheap, that they like here now that here that the stochastic, the candle did not break this Ashimoku, and then this curves here. It's a good place to place a buy. You'll still make your profit. Then on the secondly, the first criteria of entry we saw, I just explained it. It now, another one now occurred here again. You see let's just say this is the breakout candle. Let's say this is the breakout candle. You understand? And then this is your entry candle. You see the Ashimoku in the main chart indicator window 2 has both curved downward, and then your stochastic also was pointing downward. You understand? That's where you enter your trade. That's where a good place to enter a trade, to take it, to place your a sell. You make your profit. When you place your sell, you put your stop loss above the previous candle, and then hold the market. When the market is in profit, you bring your, when the next candle closes in profit, you bring your stop loss to break even, to the entry point. You understand? And then hold one of the, and then when the Ashimoku is still above and then coming downward, that says that that entails that the market or the strength is bearish. You understand? So that's when you start looking for a bearish setup to enter your trade. So when they what you use to enter a trade most times is the stochastic. When the stochastic now comes and open here, already the Ashimoku is already pointing downward. When it gives you a crossover sign, and when it gives you a crossover sign, you enter. When it gives you a crossover sign, the next candle should be your entry candle. First you get a crossover sign from the stochastic. First, let the Ashimoku be pointing downward towards the direction you want to place a trade. If it is bullish, the Ashimokus should be pointing bullish, upward. If it is bearish, the Ashimoku should be pointing downward. That is, follow the direction of the Ashimoku to place your trade. Don't always place the trade against the Ashimoku direction. You get? So you place the trade, and then if let's say you entered here, you place this, you brought your stop loss, you place your stop loss back here, and then enter here. When this is in profit or this is closing profit, you bring your stop loss that was there and put it in an entry break even where you entered, or hold it for the next 3 candles and see what it gives. You can hold it for the next 3 candles at least, and then before you now know whether you will take profit or either you hold it or take it at the profit it is. Because this now, as it is now, I think it might continue going downward. After a while, it might consolidate a little bit and then continue going downward, except this Ashimoku comes down here and then breaks, and then this one, the candlestick breaks this Ashimoku and start going upward. because I'm expecting this MACD now to transcend. I'm expecting this MACD to change direction from upward, pointing up to pointing down, and as soon as it changes direction, and this the up one, the indicator window one confirms it, I'll place a sell. That's a sign for me to take a sell trade. But these things has to confirm, it has to occur, like stochastic crossover at Shimoku at the level I want it to be, or pointing towards the direction I want to trade, and then a breakout occurs. These things need to be, I need to see them before placing a trade, for taking placing a buy trade or a sell trade, taking any position I want to take. These criteria, these things need to be. That's what I really need you to place close attention to pay close attention to always. Now this thing, it occurs every time and every time. I like trading 30 minutes time frame quarters because it is less noisy, and it is not it's less noisy. Those lower time frames can be very noisy and can give a lot of wrong signals. So 30 minutes is not noisy, and it gives mostly good signals based on the strategy. And higher time frames also give good signals, but just that it take longer time. You have to wait. No, I don't have all the time, so I trade 30 minutes time frame because it's in between. It's in between the 1 hour, the 4 hours. It's in between the 15 minutes, the 5 minutes and 1 minute time frame. So I just choose 30 minutes. But notwithstanding, in some cases I use 1 hour and 4 hours, and even as well 5 minutes, to know whether to hold a trade or to close a trade, to close, to take a profit at the point, at some particular point in time. So um that's that for that. And another, I showed you about 2 or 3 ways to enter a trade. The first, to take your trade, to place your trade. The first one is Ishimoku at indicator window 1, indicator window 2, at level, below level 20 and 10, below level 20, by in between level 20 and level 10, and then the Ishimoku has given you a flat line, and then the next candle that you're supposed to enter need to bevel the Ishimoku, make it to curve, has to curve the Ishimoku to the direction you're placing the trade, in direction with your position. Or if it is bullish, it has to be upward direction, not direction or upward thrust. If it is bearish, it has to be a bullish direction or bullish thrust, bearish thrust or bearish. If it is bearish, it has to be bearish direction or bearish thrust. If it is bullish, it has to be a bullish direction or bullish thrust. Please pay attention to that. And then when there is a reversal, and if the reversal did not break the Ishimoku downward before, and then it reverses, use your stochastic now to know when you see a crossover. Use your stochastic now to place another trade, because it says it will continue high. Like this on this place now, you see it broke down. Even as it broke down, because why? This Ashimoku here, it's at level 80, 90, which is saying overbought. That's why it broke and then came down, and now I think it's going to continue downward for some time, for some minutes, for some hours or so. So if there's something you don't understand, just ask me and I will explain further. In other words, if you enter a trade like this, another criteria of taking profits is either if you're strong willed, you can hold your position. Once you see this breakout, and then a confirmation of this transition, these two windows confirming the transition, you can hold your trade until Ishimoku gets to overbought. You know, so if it is, if it is a buy, if it is a buy um entry, a buy position, you can hold your trade because Ashimoku is on oversold here. As you entered your buy, you can hold it till the Ashimoku gets to overbought. That is when you've seen these two criteria, this breakout and then this transition confirmation of these two windows. Then you can hold it for the Ashimoku to get to overbought. That if you bought it, if you sold it, you have to wait for it to get oversold before you take profit. So please take note of these things, and then you can ask me your question where you're not really clear, and I will explain to you in details and furthermore. All right, thank you. Is still your man, Mr. Augustus Emeka, Abba Forex. Thank you.